decision a customer and lightning speed. For example, a customer gets money in less than 3 milliseconds. Consumers seem to love us. We have in financial services in the maybe across Asia, the highest repeat rate and retention rate above 88%. So we have broken records of any financial services company in Asia. Startup world, if employees stay for 18 months, they're called vintage. And today, at least 70% of the people who joined more than 6 years back are still with us. The day you have the money, you can pay us. We'll charge you for the day. So many people still can come at, let's say, at 4:20 right now in Sunday evening and give the money back at tomorrow morning at 9 o'clock. They'll charge you for a day. That's it. It's very interesting, right? Imagine you borrow a lakh and you pay 64 rupees for a day. I'm sure you don't get a cup of coffee and you can get a lakh rupee delivered to you, return it back tomorrow morning. Like last month, if I'm right, we got 12,000 surgeries done. We got 200 children were born because of us, because we financed the medical bills at the hospital at that point of time. We did 72 cardiac surgeries we financed. We were able to help, I think 170 children were IVF conceived because of us last month also. Right? And imagine you didn't pay any interest on these products. I call it the life's 3 rockets, right? You'll get 3 great chances in life. You only get them thrice. If you capitalize all 3, you're going to be something big at age 30. If you miss them, you miss them.
Okay. Life's 3 rockets. Very cool.
Why our product was universally loved by people? Because we were not in a hurry to monetize. We said we'll make money over time. Right? You'll do a good, if they are able to risk rank well and you can retain them, you'll make, and customers also got it. We were not expensive. Right. At the same time, he saw we are phenomenal, better in experience than a traditional bank, and he remained with us. And that was a single learning that you learned in your previous versions. In retail, you make money with a guy keeps coming back and shopping with you again and again. In insurance, it's a lifelong business. Right. The customer has to survive 50 years for you to make money. Right. And that's the entire piece, that you marry these 2 thinkings and you come and look at our business. It mirrors ROAs of a credit card, but it builds the annuity of an insurance. Right. And you're able to mirror customer behavior because of the unsecured lending product line. Right. So it marries all 3 learnings of your previous career life. Bunch of young people, I said, let's go out partying with them. There's a month end, we don't party. There's no money left. So EarlySalary will literally party money at month end. That was the idea.
I love that tagline. Party money at month end.
Traded for that thesis, but over time we realized that, banking is more complex. You need to have regulations. You need to have a proper license. You deploy your own capital. It's not like money comes from here and there. And when we finally introduced EarlySalary, it was meant for working professionals, available on month ends, easy to pay, and cheaper than a pint of beer. I would say we are like a case study which happens in every large college, how a financial services company can be frugally built and yet be disruptive and have a great amount of market behind it. There are 4,000 companies in some format of lending, banks, NBFCs, lenders. There are only 70 of them who can generate more than 3% ROA. Only 7 of them which can give you a ROA to ROE of 20% ROE. Right, you're one of those 7. We said, yeah, we never thought our businesses like that. Right? He said, and they were like, of course, they were selling in that mode to tell us you can do more, you can grow faster. And we were like, we never thought that our execution is that good that most people don't make money in financial services. But the understanding of both distribution and liability side, when it's well balanced, the returns equity are stable, consistent, and you can grow at, let's say, 50% CAGR path for another 10 more years, which is phenomenal to build a company out. You may not realize it from outside, but the scorecard which gives you money every day or blocks you out every day is rebuilt every year. Right? Usually financial services companies build a scorecard once in 4 years and optimize it once in 8 months. We build and deploy the scorecard every year. We optimize the scorecard every 2 months.
And what is the scorecard, if you can share further?
It's the AI algo which says yes or no. So today it has more than 25,000 variables. And that is what is the game is, that can you really demonstrate it, not just talk about it. Of course, one rule in financial services I've learned, don't tom-tom that you're doing too many things. Keep it quiet. It's a business which is built on scale, operations, well management. It's not built on marketing.
Yeah, I mean, and you've said that marketing has not been something you've done at all at the business. So it's good.
We were actually struggling to raise our Series A. We completed 126 pitches and we kept getting no's. Right? I think he gave the most honest advice. Don't try to sell a dream, sell reality. We raised money for 127th, 28th and 26th fund. One said no, came back and said no. We raised 2 million and 16 million within a 1 month window.
After his advice.
And this was 2016, and that's like a 100 crore Series A happening in today's time, right? The advice was simple: sell the reality. If you make money, tell you make money. If you know how to run the business, tell that. Don't try to compare. Don't try to say it's going to be disruptively large. Right? And that's a great advice. Be real, be focused, you'll deliver to your promises.
Welcome to episode 138 of Founders Unfiltered. I'm Aviral. We've been running this podcast for over 5 years now. And the goal's always been simple, unscripted, honest conversations with Indian founders about what it really takes to build a company. Today's guest is Akshay Mehrotra, who's the co-founder and group CEO of Fibe, one of India's earliest and most scaled digital lending platforms. Fibe was formerly known as EarlySalary, and they've disbursed over 33,000 crores in loans, having served over 25 million customers. And it's also a regulated NBFC today. In this episode, we'll unpack the evolution of consumer lending in India, how Fibe scaled with discipline on risk in a market which is notorious for high default, and why Akshay believes the future of credit lies in affordability and not just access. Akshay, welcome to the podcast.
Thank you, Aviral. Pleasure to be here.
Akshay, for our listeners who may not know Fibe yet, how would you describe what you're building in 2 lines?
So we are like a digitized version of Bajaj Finance. We help young people get access to credit early. We use AI so that we can decision fast. We are Asia's fastest lenders. We make sure money is more democratic. It's rational in pricing. It's impact oriented. Let's say 40% of the sources of loans that we do, we don't even charge interest on them. And currently call ourselves ethicality to the core. We are the simplest product to borrow. At the same time, we'll decision a customer in lightning speed. For example, a customer gets money in less than 3 milliseconds. Consumers seem to love us.
Oh, wow. Okay.
We have in financial services maybe across Asia, the highest repeat rate and retention rate above 88%. So we have broken records of any financial services company in Asia for the last 10 years in operations now.
Amazing. Speed and TAT is also something at AJVC. By the way, we respond to our founders in 30 hours. Obviously, we can't do it in 3 milliseconds. That's very hard. But I think it's a wonderful dimension to build a financial services company on, especially when it's so hard and so problematic to get a loan.
Oh, absolutely. And another concept of ethicality is also very important. Most founders try to build a business, but they really don't cause impact to society. We believe that we are building an enterprise for middle India, catering to mass affordability, and at the same time impacting lives every day.
Understood. Now we'll move on to a rapid fire just to warm things up. One professional trait that you've developed as a founder, which you didn't have when you were working in a company.
I think to be really charismatic. Founders need to be the most charismatic person in the room. I can actually say that if you're flying on an aircraft with me, I'll at least make 20 friends before I get down. Wherever you go, people will talk about, what can we do to partner you? We should be friends. I think that's very important. That's a trait which is very unlike me as a person. I'm a very shy person. But when it comes to business, I end up making good friends.
How did you learn it? If you did, what was the process? Because I'm sure a lot of founders would need to get this.
When you're building very complex things, you need a lot of help from many people. Right. In our business, you wanted extremely sharp people who worked in maybe the best banks to really work with you. At the same time, money is needed every month again. We need to raise almost, let's say, 350 to 400 crores of capital every month to sustain our business. That means you're always raising money. Right. Third, it's a regulated business, so no one should dislike you. Very interesting personality to carry. And at the same time, when you build a company where attrition levels are low, your team stays with you for years. We have people who have crossing 9 years, 8 years, 7 years with us. And in startup world, if employees stay for 18 months, they're called vintage. Today, at least 70% of the people who joined more than 6 years back are still with us. And I think these are things that founders learn over time. Unless you build an ecosystem around you like this, you'll not build stellar companies.
No, amazing. I mean, I'm sure it has a lot to do with your retention and culture and how you build people. And maybe a small Pune plug. Maybe it also has a little bit to do with Pune.
It's a very good city to us.
Yes. No. I've heard this story across companies as well. A fintech product you love, which is not your own?
I love my competition, actually. I love the energy they're putting in to disrupt the category. I love CreditBee to challenge us. I like MoneyView because they're trying to do something unique. I love the part that people are trying to solve the problem that we are. Right. And that's very important, right? Yeah. If something was that easy to do, you'll not be able to do a good job of it.
Correct.
Many people are trying to solve a problem. It's an inherent problem which needs solution. So you must love your competition. I always say that.
Okay. I will keep that in mind too. One decision you wish you'd made earlier at Fibe?
Starting it earlier.
I think every founder feels that. I feel it myself. No, I agree. Starting it earlier. How much earlier though?
No, I think I wouldn't say too early. I think that my career life was also very interesting. So I would say I was the youngest, like a CXO or a CMO in a company at 25, 26. The exposure I got was phenomenal, building other companies out, from Bajaj Allianz to Policybazaar to Future Group, etc. I think it gave me the perspective of how to face the world. Majority times when founders start companies, they can solve complexities because they've seen it before. But when you're building a business which is extremely complex, the learning curve for previous experience can really help. So as it scales in, you know when to press the pedal on what.
Yeah, makes sense. What does affordable credit mean to you?
Affordable credit basically means it should be invisible. You should not face the pinch of it, and it should not push you to take too much of it. Right. That's the entire part. We call it the foyer syndrome. People end up taking more fixed obligations without realizing they need that much money. Right. So borrow the exact amount that you need. One of the concepts we created was the day you have the money you can pay us, we'll charge you for the day. So many people still can come at, let's say, at 4:20 right now in Sunday evening and give the money back at tomorrow morning at 9 o'clock. They'll charge you for a day. That's it. That's very interesting, right? Imagine you borrow 1 lakh and you pay 64 rupees for a day. Then I'm sure you don't get a cup of coffee and you can get 1 lakh rupee delivered to you, return it back tomorrow morning. That concept is very alien in financial services. Banks try to block you for 5 years, 7 years commitment. And we come and say, if you feel you have the money available today, pay us today. Don't wait till your EMI due date or when you want to pay the last EMI. And that flexibility changed the way and democratized credit in the country, right? So you're no more expensive. You're affordable at any given time. Right? That changes the way you look at the product.
Very interesting. Did that increase top line though? I mean, you're sacrificing something.
So it's very interesting. It stopped our customers to ever look at our competition. I don't think lose a customer for almost 10 years of his originating with us. Remember, our average tenure is 12 months. The customers still end up staying with us for almost 120 months. That is phenomenal, right? Imagine you acquire a young guy and you retain him for 10 years. People never thought it's possible in financial services. You're bound to lose someone for 0.5% cheaper interest rate. right? And here we're able to retain him really well across the life cycle of him. And that's what is different about us versus anyone else. We are not in a pressure to go and source customers every day. Our customers stay with us. We grow with them. We deploy more capital, and we become like a sizable component on his balance sheet every day. So when you're in your salary slip, let's say if you earn 50,000 rupees and you end up spending like 8,000 rupees a month on us, that's a sizable portion of your wallet, right? And that's the relationship we carry with every consumer of ours. Right? And that is a very strong relationship. You don't worry about what he pays, what he borrows, but look at his cash flow. It's maybe definitely more than almost equivalent to his car loan or his house loan. But this is still a cooler product, simply available, no human interaction. He keeps using it for many utilization services, and he still spends 8,000 rupees a month on it. It's phenomenally interesting. And no one ever thought financial services can be available in this simple manner.
So retention is what you end up getting effectively.
Yes, phenomenal amount of retention, got a goodwill.
Makes sense.
Lenders will talk about, like you introduced us and said, we did 33,000 loans. Now that's okay. Yeah, or we did maybe this month we'll do 1,300 crores of disbursement. But it's much better to talk about what impact you cause. Like last month, if I'm right, we got 12,000 surgeries done. We got 1,200 children were born because of us, because we financed the medical bills at the hospital at that point of time. We did 72 cardiac surgeries we financed. We were able to help, I think 170 children were IVF conceived because of us last month also, right? And imagine you didn't pay any interest on these products because they're so ethical and they're so good for mankind. You're able to build out that capability. And yet you, of course, are doing a large amount of business at the back also. Goodwill you carry, a lot of respect you build in the market, because in the end, this is what excites founders in a good manner.
It's adding personality to the financing rather than just, keeping it any number. Yeah, rapid fire was not very rapid, but I think it was very interesting still. If you could build in another sector outside of fintech, what would it be?
Of course, you'll build something which is far more closer to your personality. I would say I'd love to disrupt the automobile space next.
Okay.
Right.
And what exactly in that?
I think what Tesla did to the US market and to the markets, I think India needs a disruptor in that category.
Okay.
Right. I think that will be, if I ever step out of financial services, that's the area I'd love to explore. Right. And I think that's where could be the next interesting idea happening.
Fascinating. So a different automobile.
Yeah,
basically.
Absolutely.
We share a city, while maybe not growing up for you exactly, but spending a lot of your time. Where did you grow up? What were your early years like? You said your parents.
So I'm a Fauji kid, right? My father was in the Air Force. I've studied in 16 schools, lived in 54 houses when I was growing in.
54 houses.
Right. I've at least parents were posted in 12 states in the country. So I've seen from Trivandrum to any other city in the country. Have built friends over so many years of travel and exploring. But what's interesting, I think, is every time you reached a city, you always were able to make new friends and able to connect locally. I think it was interesting moving bag and bags from Pune to, let's say, Delhi and building a company at that point of time. Most people will have a tough time settling in, and then moving from Delhi to go Bombay for a couple of years. People will say that's impossible. You can't adjust to the cities. But I think that early childhood gave you the ability to adjust to any new place faster.
Right.
And you could get on to doing businesses in a good manner.
Did it teach you something about ambition or risk, or just, getting along well?
So I'll give a very different intake. I think one of my biggest experience was when I was in future retail. I used to run Big Bazaar. Every city and every state is different. That was a company where you had to understand local flavor really well when you do national work. You did impact 50% of modern retail in the country. So what is the sentiment and what is the difference when a festival happens in Hyderabad and versus a festival happening in Kerala? Very different. You understand locality. If you've not been there, it's impossible. But if you've seen them on the ground, it gives you a very different exposure. On the other hand, I would say I run a risk business, right? We give loans out of security, right? And it's something which you see in the armed forces. They are invisible protection happening for people. We end up living a great life because of it. Right. So you'll have learned from as you saw that in your growing up, you saw your father speak about these things. And today when you see in your life, you're able to get the learnings in place.
That's very interesting. And, I'd love to learn of that journey from being a Fauji kid to, studying in Pune and then joining what now is Bajaj Finance very early on. What was that like? How did you end up, becoming a young CXO at Big Bazaar and Policybazaar? How did that happen and what was that journey like?
So it's very interesting, actually. I think it was about one, always delivering to what was given to you. And I would say amazing bosses also you had. I can never forget Mr. Hemant Kohl or Kamesh Goyal, the way they gave you opportunities. Even at, let's say I was at 24, I was given an impossible ask, right? And most people said it'll take 5 years for you to turn it around. And I would say Kamesh would be behind you and saying you can deliver in a few months. And it happened. Turned around, let's say, a segment of the country within a quarter and came back and said, yeah, it's profitable now, let's run better. Or Hemantji coming and saying, listen, I saw Axis Bank really work. Insurance is very different, but why can't you build a loyalty system in health insurance? You looked at him and said, not possible. And then him pushing you hard, and before you know it, you can pull off an unbelievable achievement. Right. So unless you get great bosses, you can't deliver. At the same time, once given a task, you have to really deliver to perfection. Right. And many of the time in young ages, you said, ho jayega, karte hain. That attitude is very different. I call it the life's 3 rockets, right? You'll get 3 great chances in life. You only get them thrice. If you capitalize all 3, you're going to be something big at age 30. If you miss them, you miss them.
Okay. Life's 3 rockets.
Yeah.
Very cool. Well, what do you think about people who didn't catch any of the rockets after they're 30? What about them?
No, but then it's a slower journey for them.
Slower journey, yeah.
Because
Makes sense.
You'll always get the opportunity to work hard and deliver. But if you can accomplish things early in your age, when middle ages, you're very intelligent. You've seen the world.
Correct.
At that point of time when you can execute, you can orchestrate things at a larger level without, getting the worry. Majority.
I agree.
I see some of my friends, they get stressed very easily. Right. And anyone who knows me, I don't think I ever lose my temper. I have no stresses around me. I said, yeah, it's so easy. What's the complication? We'll do it.
Yeah, I love it. I agree though. I think that, I never thought of it as 3 rockets, but you get opportunities when you're young and you should make the most of them. I think. And I think somehow, the best times to start a company is around that only.
Yeah.
Like your late 20s, maybe early 30s. So
correct.
No, that makes sense. How did you switch from marketing to building a fintech, which was full stack?
So there were 2 parts in this. I think the first part was, as I moved industry within marketing, I learned that it's not important to know the industry, but to know, to understand the pulse of people, pulse of economy, pulse of things. Like when I moved from insurance to online and online to physical retail, you learned how to see and touch what is better. While building a fintech, you could time it. I think we saw there's an opportunity. And let's put it like this. In 2015, when we launched, we were the first lending app in the country. Right. Within 6 months, we saw others also starting. Right. In fact, EarlySalary became the category. Everyone said, do you have a product like EarlySalary? Anything else, right? And we were like, yeah, we had that product for our learning. We were not doing, that's not the actual business. The actual business will come. Right. We had to learn faster, so we need a shorter term product. And as algos matured, we could run and do multiple products faster. But this is where I think the interesting versions come. Did you see that somewhere else? Could you carry forward that learning quickly? And that is what exposure and various industries gave you. For example, within Future Group, largest retail house, but we did a co-brand which became finally GE SBI. One lesson you learn in credit card market, you don't issue cards to people who are not carded. Right. And that means that how will you democratize credit? And we said, if you want to democratize, you'll have to build the habit of repeat. Only then you can really build a lending product. And that was the game changer. Why our product was universally loved by people, because we were not in a hurry to monetize. We said we'll make money over time. Right. You'll do a good, if they are able to risk rank well and you can retain them, you'll make, and customers also got it. We were not expensive. Right. At the same time, he saw we are phenomenal, better in experience than a traditional bank, and he remained with us. And that was the single learning that you learned in your previous versions. In retail, you make money with the guy keeps coming back and shopping with you again and again. In insurance, it's a lifelong business. Right? The customer has to survive 50 years for you to make money. Right. And that's the entire piece, that you marry these two thinkings and you come and look at our business. It mirrors ROAs of a credit card, but it builds the annuity of an insurance. Right. And you're able to mirror customer behavior because of the unsecured lending product line. Right. So it marries all three learnings of your previous career life.
Nice. And so you alluded to picking this segment because you could get feedback faster.
Yeah.
Was that did you take like a analytical approach saying that, hey, I want to get into this category and this seems most interesting, or was it a pain point that emerged? What was
It was a pain point. Actually, if the first case study I wrote for EarlySalary was, I was literally judging Femina Miss India.
Okay.
Right. And on that evening, I couldn't go to attend the after party because I had a store launch in Delhi next day morning.
Okay.
With a bunch of young people, I said, let's go out partying with them. They said, month end, we don't party. There's no money left. So EarlySalary will literally party money at month end. That was the idea.
I love that tagline. Party money at month end.
We traded for that thesis, but over time we realized that, banking is more complex. You need to have regulations. You need to have a proper license. You deploy your own capital. It's not like money comes from here and there. And when we finally introduced EarlySalary, it was meant for working professionals, available on month ends, easy to pay, and cheaper than a pint of beer. That was the entire concept of the product, and it was a huge success. I think we had 1 million downloads in the first 6 months itself. In a time where 10 years back, 1 million was a huge number, right? And without any, so anyway, if you look at Fibe today, it's a large customer base, huge volume disbursement. There's actually no marketing. We have built a company out of thin air without spending dollars on it. Right. And that's an interesting positioning, right? You do so much business, but you're not spending money in branding.
I mean, those are the best businesses in my opinion. Mm-hmm. And how were the early years? You also had demonetization, a lot of financial tailwinds.
It's been a roller coaster in financial services. 2016 was a nightmare. 2018 we had Demon. We came out of Demon. It was DHFL collapse and IFS. Then came COVID, then came digital lending guidelines, then there's then version 2 of it. I would say if we get a 9 months of no worry, we'll come out with a very different entity every time. But that gave us a lot of resilience, right? We were, I think, very well organized in problem solving. Day one, we faced tougher capital markets. We faced tougher equity markets. We faced a time where the industry was not loved. Right. And I remember a time where I actually went on Discovery and spoke about how others are not good. Protect yourself from, Chinese lending apps will charge some ridiculous rate to you. You won't even know what subprime is. And people came and said, how can you talk against your own industry? I said, that's not ethical. Talk about what's not good. Talk about it upfront. And then we went and really helped build the first SRO, helped eradicate not the good entities. Right. And as you came out of that, you come out of such stellar companies that you get so much of respect of what you build today. Right. And I would say we are like a case study which happens in every large college of how a financial services company can be frugally built and yet be disruptive and have a great amount of market behind it.
Do you think companies in India can be frugally built generally? What do you think about the whole raising lots of money, burning lots of money, winning market share?
I think there was a phase where you could do that. It's tougher now. As companies are becoming larger, the access of going public now is something that people want to get positioned. In those markets, you can't be ever shown as a burn-oriented organization. Right? You will get valued as profitability, profit to equity ratios, PE values. And as those numbers come in, GMV game goes away. So for founders who chase GMVs, it's a tougher area. Of course, there must be some businesses where you do that. Let's say in the category of business in financial services, people understand money. You can never lose $1 on what you've raised. So equities to be kept. You have to go and lever against it. You have to build a larger company. That is the most important principle you follow.
How did you manage the company through these cycles? Like you said, every 9 months there was something. There's both leadership as well as internally for your team and externally for customers. How did you build trust and how did you manage your team through these cycles?
I think the most important was extreme transparency in the company. So we call it the Fibe tribe internally.
Nice name.
Revolves around, the first is complete transparency of business operations. Which means every employee has access to the full analytical dashboard. You can see what's happening in the company, across the company.
Oh,
right.
At all times.
At all times. Reviews are public.
Okay.
Right. Which means that if you ask that an IT guy to build something for you, in your product review, the tech is going to be sitting in it asking you the questions, boss, you got build what happened to it, what's the result of business? And I think that has allowed the teams to understand every complexities. Like we actually saw, let's say when DLG came out, it wasn't the compliance team chasing business teams to make corrective actions. It was the tech team after business. I'm making the change. I'm not waiting till tomorrow morning. I don't want the regulator in my office and for the next 7 days. I've already made the change. Now you live with it. Right. So it was a very cohesive way of doing work together. Right. And I would say every time something was going else in the industry wrong, our teams came back and said, let's solve for every problem. I remember a very interesting phase. Last year, we were told it's a credit crisis. The risk is going to be all-time high. Right. And we actually thought our risk team will be standing on, right in the quarter starting and saying, I'm cutting this, I'm cutting that. Suddenly the business team came and said, we heard risk is going to be high. We're going to shave off a large customer segment, which is profitable. Risk is high, so we'll shave it off. Risk guy is saying, I don't want to shave it off. It's okay. He said, no, I don't want to do that business. Right. And it was such a revelation that the business teams can work with the risk teams, and usually they're supposed to fight with each other. So here they are working together. And in fact, when we had our annual board meeting, we showed to our investors our risk is reduced from, let's say, 12% bounce to 8% bounce. And we, of course, we have the second largest NBFC and third largest NBFC's MDs in the room. They're like, no, but I just did my board meeting and we were showing like 3 times higher risk and things are going up left, right, things we are worried. And you guys are saying, no, this year we're planning to grow at 80%. And entire board was like, okay, can you just make sure the profit number remains? And we said, no problem. We are such a good situation. We can double up at. We are far more comfortable. So that's a very different discussion to happen, right? It's when the entire organization is able to understand what to solve. Rather than a few people knowing the intelligence, how do you get all 961 people's single objective to drive a problem comes in? Right, and that then gives results in a good manner.
And is the team's longevity a factor to play? Of course, I'm assuming because people have stayed around for so long, they trust each other more.
Yes, and it's also, it's actually tougher for people to then work outside. So once they see this company more like a family where they understand what's happening.
Yeah.
It's like a HUF. You can fight to argue to solve, but the money internally is so well connected.
Yeah.
They say, yeah, this works better for all of us.
No, good. And on the consumer side, how did you manage trust and risk? Because sometimes they are conflicting, like you said, business and compliance in some way.
So this is the time we actually went out and said, we will switch on our impact businesses coming in. So in the last, post-COVID, we went and built our education business and our healthcare business, where we said that we want to eliminate the interest burden of the consumer completely. Right. Interestingly, we are the largest education fintech in the country, yet we don't do education loans. We only do working professionals to take a skilling product. Say you go to a Symbiosis and you're a working professional who want to do a course on Python or a part-time MBA, we'll finance that course. Right. We do more than 100 crores a month of interest-free education loans in the country. Right. A business which is run by 15 people is able to be a large business itself. Right. We built the health business, very interesting. We built the health business with doctors being the BD managers. Right. Why? Because we said we're not going to sell to the CFOs of hospitals. We will work with the surgeons because the pain point is they want to do good quality surgery, not argue with the insurance company on what the treatment amount is. Right. And then we worked with the hospital managers to come and say, listen, you pay the interest on the consumer behalf. So today you can walk into a Manipal or an Apollo or a Ambani hospital or Aster and get a zero cost EMI for 24 months. It's unbelievable, right? At the same time, we're ethical. We're able to get so much of impact in the economy. Our healthcare business is interesting. We are the largest healthcare lender in the country. We are the only, classically is known as buy now, pay later. It's a taboo word. Because everyone knows in BNPL you can never make money. We are the only profitable BNPL company in the country, right? And all of our loans are interest-free and impact to the level that we are able to raise equity and debt both against as impact category, right? Which is impossible to demonstrate in financial services, right? Usually you're financing mobile phones and TVs and fridges. Right. Here you're financing healthcare and education as the second business that we built in. Right. We bring in the speed that we learned on the app of giving the fastest possible loan. We build in the ethicality by solving a real pain point for mass India.
Yeah. Solving for party money has built a very large organization eventually.
Absolutely.
I think it's a well repeated phrase that you pick a niche and you dominate it and then you move to others. I think it's been very interesting to see how you've taken that whole arc and become like a large scale lender.
Yeah.
And things are going well, but when did you feel like it's gone completely bananas and how did you deal with it? What was the tough
times? There was a moment where we had enough money left to decide to go to Bangalore to have our VC pitch by flight or keep an employee and go by bus.
Oh, wow. Okay.
And I think we were desperate enough that day to raise $4 million and come back.
Okay.
To a time in COVID where we were told by the regulator you can't charge interest for the next 8 months.
Oh.
Money lying outstanding that you can't charge and lenders you still have to return their money.
Oh.
Right. And you're saying, okay, how do we run? And interestingly, consumers coming to your rescue and say, no, we love you so much, we'll give your money back, don't worry. Without asking, they just came and continued to pay their EMIs as they were supposed to. And on, I think third time it happened when we were having a round happening and one of the investors just panicked and said, I'm not giving it to you. Right, they were having some problem with their entity and we wondered what to do, right? Once you know the money is hitting tomorrow morning, you come to a growth and say, we've executed everything. And at that stage, one day before we were making plans how to grow and next day morning we were taking who to remove because cut down cost. And then I would say while me and Ashish were sitting in a coffee shop. We were so stressed. Office jaise pehle kar lete hain kaam. And office to the home to coffee shop was 1 kilometer. Coffee shop to home was office for another 1 kilometer. So we stopped for 30 minutes in between. Did that work? I mean, by the time we finished and reached office to start taking the calls, we got one cold call and said, don't worry, even the new guy is not coming. We're still going and transferring the full amount to you. So we said, oh my God, it was such a revelation. Whatever said no, we said no, we are back to growth. You should have seen the change in mood within the 32 minutes of stopping for coffee and 1 minute driving each. It was a full roller coaster ride that we did.
Yeah, I mean, building a company is hard. And, you've built in a category which is regulated and you're profitable. What do you think founders underestimate about building in fintech? And there are like, I don't know, thousands of lending startups now. What would you say are the top 2 things that they underestimate?
The first is leverage.
Okay.
Most of the time, they don't think that a financial services company, you should worry about the liability size and look at the leverage business.
Right.
Financial services is nothing but ROA getting resulted to ROE. Right. So actually, we were meeting a bunch of bankers who came to pitch how large can you build this company, when to go, etc. They came and showed us some interesting data. They said there are 4,000 companies in some format of lending, banks, NBFCs, lenders.
4,000.
Right. There are only 70 of them who can generate more than 3% ROA.
Okay.
Only 7 of them which can give you a ROA to ROE of 20% ROE. Right. You're one of those 7. We said, yeah, we never thought our business is like that. Right. He said, and they were like, of course, they were selling in that mode to tell us you can do more, you can grow faster. We were like, we never thought that our execution is that good that most people don't make money in financial services. But the understanding of both distribution and liability side is well balanced. The return on equity are stable, consistent, and you can grow at, let's say, 50% CAGR path for 10 more years, which is phenomenal to build a company out.
So the balance of distribution and the liability.
Yes.
That's the art in this.
Absolutely.
And how do you balance experimentation with over experimentation in a space that is regulated? Because you've launched 5 cards and you have salary linked BNPLs and you have so many now verticals. Where do you start? Where do you stop? How do you do this?
First is the rule of innovation is you have to destroy what you build every 3 years. So it is the 4th version of the platform, 10th version of the scorecard, right? Actually running in our company. You may not realize it from outside, but the scorecard which gives you money every day or blocks you out every day is rebuilt every year. Right? Usually financial services companies build a scorecard once in 4 years and optimize it once in 8 months. We build and deploy the scorecard every year. And we optimize the scorecard every 2 months.
And what is the scorecard, if you can share for
It's the AI algo which says yes or no.
Okay.
Right? So today it has more than 25,000 variables. Right? That's what gives you the money in high speed or maintains you.
Right.
Unless you commit to have such a large team to build that scorecard. See, we talk about AI today, but we had this team for the last 9 years, a 50-member team just doing ML AI work. Now with generative AI, now you can use more variables, you can get for faster. But to incubate that early, it's what causes the result to come in. Right? Similarly, I would say, don't experiment with your core business unless it starts becoming phenomenally profitable.
Okay.
Right. Like we did not do another product for the first 7.5 years.
That is good advice.
Right.
So till you don't become profitable, don't experiment with the
second is once you have figured out how to grow another business faster, don't slow down. The journey to do our education business was interesting. From 0 to 1 crore took 1 year. 1 crore to 18 crores, it took another year, right? But from 18 crores to 100, it took 4 months, right? So that once you understand what has to be done well, you just go and press the button.
And there's a lot happening in India's, credit landscape. There's UPI credit, there's account aggregators enabling it, there's the whole ONDC framework. Do you see an opportunity for yourself, or in general, where do you see the opportunity?
See, I think this is where you should not be the followers of these. You have to be the ones to create the offering. So, there was a lot of noise about ONDC getting into lending, and lots of banks will step in. So I met the ONDC team. I said, okay, I know you've been talking about it. Do you want to do serious business? They said yes. He said, we'll be live in 5 weeks, right? And in fact, we announced the number. We did 4.5 crores in the first month of actual operations, right? And they did, if I'm right, 5.2 crores. So we did 85% of them in the first month itself, right? When UPI on credit was spoken about it, in fact, we have the first UPI on credit card running for the last 18 months. Right. So whenever innovation is there, you got to be the first guy to see how it works and prove it can be delivered. We hear about UPI and credit coming. We have a running product which does more than, let's say, 50 crores a month. Right. And that is what is the game is, that can you really demonstrate it, not just talk about it. Of course, one rule in financial services I've learned, don't tom that you're doing too many things. Keep it quiet. It's a business which is built on scale, operations, well management. Is not built on marketing.
Yeah, I mean, and you've said that marketing has not been something you've done at all at the business, so it's good. And you recently raised a big round. You've launched Fibe cards. What's the vision for the company? What do you want it to be? And are you looking beyond India as well, or is India the path for you for maybe the next 5 years?
So I think the first is we are trying to solve the problem of every young Indian as he grows.
Okay.
So while we become the first line of credit, we are also his first capability of buying his insurance. We make sure he comes in to get his first credit card with us. We are able to facilitate now his medical expenses, his skilling, childbirth, schooling.
Right.
So we are growing with him as he goes through his life cycle.
Okay.
And as he looks at other products, we'll start providing them also. Right. So you'll see us very broad spectrum covering everything in financial services for this young Indian. We believe that we can be let's say a very large outcome financial services company.
Okay.
Maybe in 7 to 10 years, we can pull off the 50,000 crore AUM number. Right. And it'll be a great demonstration in the market, right? Can you pull off such a large company?
Right.
And of course, I don't want to get distracted by losing India as an opportunity.
Okay.
Right. We receive more than 2 million new customers a month. Right. And now that is phenomenal. You can't get markets this large in rest of Asia, etc. Right.
Correct.
There's no point getting distracted. Right. Opening other markets is easy, but the first game is, can you become so large that you cause serious impact? Right. And every business that we're incubating now is like $1 billion business on its own. Right. And we have to look at it in that matter. Like,
Got it.
We this year have launched 3 new lines. One is health, one is travel, one is affordable solar,
Right.
and the other is loan against mutual fund. Each of them is $1 billion opportunity on its own.
Right.
Right. We need to make sure that each of them scales in, just like in education went from 1 to 100 in 2 years every month. Healthcare has gone from actually doing 10 lakhs a month to now doing 150 crores a month already. Right.
Wow.
We are only in healthcare, we're only there in 12 cities while the company operates in 800. So huge path available to grow. So every business should be looked in that manner. Can you really grow them to 100x in let's say a 48-month window?
Right. Awesome. And to close out why we call this Founders Unfiltered is, what's one piece of unfiltered advice or feedback you got, which was brutally honest? It could be from a teammate, investor, or maybe even your co-founders, that changed the way you think.
So I think my most interesting insight was given by Ajmer's Hemant Jalan. So Hemant runs Indigo Paints in Pune, right? We were actually struggling to raise our Series A. It completed 126 pitches, and we kept getting no's. Right? I think he gave the most honest advice. Don't try to sell a dream, sell reality. Right? We raised money for 127th, 28th, and 26th fund. One said no, came back and said no. We raised 2 million, and 16 million within a 1 month window.
After his advice.
And this was 2016. And that's like a 100 crore Series A happening in today's time, right?
Correct.
The advice was simple. Sell the reality. If you make money, tell you make money. If you know how to run the business, tell that.
Yeah.
Don't try to compare. Don't try to say it's going to be disruptively large. Right? And that's a great advice. Be real, be focused. You'll deliver to your promises.
I think that's good advice for all founders trying to fundraise. Akshay, thank you for your time. It was super interesting. And I think we could have talked for much longer. But I think I learned a lot about fintech and building a company from scratch from the conversation.
Thank you.